Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment markets, hopefully to better position your portfolio. We've seen a tremendous amount of turmoil in the markets. In fact, the market, most indices from their high just a few weeks ago are off about 16+%. Most of that occurred in just the last three trading days alone. And while I never like a downturn, I don't get emotional and I make good decisions based upon the information that we receive. Our long-term MTI, our market trend indicators, have not yet signaled us a sell in most equity-based positions. So we continue to hold on to what we have. I believe we are well positioned for our clients, not only in risk, but also reward. I think too many investors today simply do not have an investment strategy and make decisions based on emotion only. And even though you may be using a so-called advisor, that advisor probably is no more than an insurance salesman or stockbroker and not actually involved in managing your money, although most people have that misconception that's what that person does. Unless you're dealing with a registered investment advisor, money manager, your money's actually not being managed. You're working with a salesperson and it's up to you to make those decisions. So I always tell people when you hear hold on, things will come back, sometimes that's appropriate, often it is not. What is your strategy? Now if our market trend indicator in the long term changes, we will automatically exit risk-based investments based upon our criteria and our investment management style. We're doing two things right now, and I'll tell you what those are. One is we're watching our indicators closely if there's a reversal. And number two, if there's a reversal on the upside, we are already putting together our laundry list of investments that we will either allocate more money to or add to the portfolio in order to recoup any losses quicker, in our opinion. I think too many investors are worried about the downside when you ultimately should be looking right now, putting the grocery list together of what you want to be purchasing when this trend reverses. Now, Bernanke is going to speak this afternoon. I have no doubt in my mind that the U.S. government at this point is going to do whatever they can in order to better the economy. And bettering the economy is going to mean, in my opinion, a higher stock price. Now, I look at overseas investment markets. We are looking at that closely. I believe the emerging markets, when this thing reverses, are going to be back much quicker than the U.S. markets in general. I think the S&P is going to be the big lagger on return back to the upside. And I think investors who don't have a strategy, don't make changes, are going to be the big losers on this one. We still own a substantial position in gold. We've made a lot of money on this for our clients. We are continuing to add to that position at this point. We are looking at the emerging markets, as I made a comment earlier, closely, and we've got a couple areas in the emerging market specifically that we want to add some risk assets to, because I truly believe in the next 3 to 5 years, investors who have a good discipline are going to be happy investors. If you're worried about your money, if you're doing knee-jerk reactions, if you're basing your decisions on emotion, I think you're making a mistake. And I'll give you a great example. I received a phone call on my radio show on Sunday from a nice lady who owned both Bank of America and Citigroup. I've been telling investors for years to dump those stocks like there is no tomorrow. I asked this lady why she bought them. She said because of her research. When I questioned her about her research, there was really no research at all. Most investors buy investments with little to no research or little time spent on her portfolio. I asked her who manages her money. She says herself. But clearly she's managing nothing because she doesn't do any research really on price to book, price to earnings, margins, all the metrics that are important when you're buying individual stocks. She didn't even know what these were. The bottom line is if you're doing it yourself and you're not spending a lot of time and money on research and really understand what you're doing, then you're really not managing your money at all. Find yourself some help. If you're using one of these brokerage houses or insurance agents that are basically really just selling you investments and you are not happy, get help. Call our office. We would be more than happy to take you on as a client within certain criteria, of course. We always love taking new clients, but make sure you're not an emotional investor. What I'm telling investors right now is you want to plan for the upturn ahead. You want to look at if this market's going to keep going down. If it does, and our market trend indicators tell us, we will exit more risk assets and protect client principal. But I believe right now we are well positioned for any upside potential there is, and we are also well planned for any further downside with protection when necessary. This is Brian Resney with the Resney Wealth Report. I hope this video was of interest to you and informational. As always, call our office. Don't go it alone. Don't procrastinate. Don't let emotions drive your decisions. Call us if you're getting bad investment advice. We'd love to help you. Our office number, 800-618-8577. Make sure you visit my website for more updates every single week. And until Sunday's show, make sure you have yourself an extremely profitable week.